I wanted to talk about the brokerage that shall not be named, Robinhood. I just named it. Sue me. So quite a while ago, at least a month ago, I did a poll that said just curious. And the three options were hate Robinhood, like Robinhood, indifferent. But the vast majority, 73%, were either indifferent or liked Robinhood. Let me move the screen over so you guys can see it here. So it says hate Robinhood, like Robinhood, indifferent. Obviously, that's 73% that are either indifferent or like Robinhood, which is probably more of a majority than you might think. There's a silent majority that doesn't speak up because they're scared of being squashed by the raging minority who hate Robinhood because they lost $200 in January of 2021. That probably offended some people. I was there too. I lost money too. Okay, so don't pretend that you're the only one who lost money. Some people are just more grown up and able to look past it and see what actually happened. And I'm going to explain what happened in my take on Robinhood as a stock as well. So let's just focus on. I also should preface that this neurological thing, it makes me more aggressive. So if I start feeling like if it feels like I'm attacking you, that's not the real me. Okay, I'm usually a nice, soft, pillowy guy. I don't know. Maybe some of you guys know me better than that. So let's focus on this top one here. It says 26% hate Robinhood. So I did a second poll because I was like, okay, 26% hate Robinhood. Where did they go after? Where did they go after Robinhood after they closed their Robinhood accounts? Because they were so mad that Robinhood turned off the buy button for GME and other meme stocks in January of 2021. Most likely place was Webull, so I thought I'd go ahead and ask that. So I did. One more question about the brokerage who shall not be named. It seems I've already made the joke I made at the beginning of this video before. 20% said I switched from Robinhood to Webull. 44% said not applicable to me because they weren't part of Robinhood or they stayed with Robinhood, and the last was just like Merry Christmas stuff. So let's think about it. 20% switched to Robinhood to Webull after GME. 20%. And down here, it's 26% that hates Robinhood. So it's not 20% of that 26%. That would be like what? I don't know, 5%. It's 20% of the whole switched to Webull. So that's, the majority of the people that hated Robinhood moved over to Webull, assuming the same participants were participating in the poll, the second poll, which, using sample size data, it's 9.9K votes, and this one had 4.8K votes, so like pretty close, so it's a large sample size. Well, guess what? Webull also turned off the buy button for GME and other meme stocks. It wasn't just Robinhood, but everybody was using Robinhood. Most people on Wall Street Bets were using Robinhood. It was super popular. Wall Street Bets had grown to like 10 million members, and everybody was using it. And that's all they saw was that Robinhood screwed them over, when really it was Robinhood and Webull plus a million other different brokerages. Some changed the way you were bought, not so aggressively. Like I think TD Ameritrade changed like margin requirements, but pretty much every brokerage from little to big changed the way you could purchase or transact those meme stocks. The smaller brokerages couldn't post collateral for the DTCC, the Department of Trust Clearing Corporation, where it takes 2 days for the trades to settle, and they have to, in order for the trade to go through immediately, they have to post the collateral for the trade. The small brokerages couldn't afford to do that. The bigger brokerages could. They just had to increase the margin requirements so that people weren't buying a bunch on margin. So there's a little bit of a bias there, right? Where people say they hate Robinhood, but then they switch to Webull. But nobody's mad at Webull. They're only mad maybe because they're a Chinese-based company, but nobody's mad at Webull for turning off the buy button. But they did the exact same thing. Okay, and so I thought, let's ask. It's all the rage. Let's ask ChatGPT. Let's see what he thinks about. No, not my bank account. Please, for the love of God. Let's think about. Let's see what this AI has to say about the repertoire of brokerages that affected trading in 2021. So I'm going to pause for a second here and say a couple things. One, it's going to sound like I'm a shill. I'm actually not a shill. I don't even think do I even use Robinhood in my want your free stuff? No, I use Webull. I have my my what do you freaking call it? It's TradingView, and then my memberships for YouTube. I don't even I'm no longer a Robinhood sponsor because I want to be able to speak my mind without it being interpreted as me being a shill because I'm trying to get money. I get no money by saying this. This is just the truth. I'm seeking the truth. So asking ChatGPT, just because it's the easiest way to compile everything. I've looked through other sources as well, but give me a comprehensive list of brokerages that restricted the trading of just GME during January of 2021. And you'll be surprised to find out that it wasn't just Robinhood that was doing it. Here's a list of brokerages that restricted trading of GME during January 2021. Let me zoom in a little bit. Robinhood, TD Ameritrade, Interactive Brokers, E-Trade, Charles Schwab, Citadel Securities, obviously Melvin Capital, Morgan Stanley, Citadel LLC, Fidelity Investments. Note that this list is not exhaustive, meaning there are more, and the restrictions that were put in place are due to unprecedented surge in GameStop stock price caused by coordinated buying of activity among retail traders and social media. Okay. Could you add, could you give me some more examples of brokerages that restricted trading? Certainly. Here are some additional examples of brokerages that restricted trading into GameStop in January 2021. I sound like Jim Cramer that I talk. Webull, Public, SoFi, M1 Finance, JP Morgan Chase, Goldman Sachs, HSBC, Citigroup, Barclays, UBS. Again, not an exhaustive list, et cetera, et cetera. It's just, I'm here to say that if your reason for hating Robinhood is for turning off the buy button, you have a reason to hate a lot of different brokerages, and I have not seen that. Particularly with Webull, because it's like what everybody moved to, because it's another baby brokerage that just makes things look pretty. You get free stocks and stuff. I guess you can't see me. I'm getting used to this whole thing. So it's just it's a bias. It's a bias towards Robinhood because the people were using Robinhood wouldn't happen. So let's talk about what I think about Robinhood stock going forward. And then we'll go from there maybe. So here's my TradingView account. Let me make sure you can see it here. Let's move it over. Okay, here's my TradingView account. I do write-ups on basically everything I talk about, except for maybe this one, but it kind of ties into my Robinhood case to begin with. This was written just before Christmas. What was it, February now? Oh, good Lord. I'm just going to go ahead and read this to you. You should follow me. In the Linktree link down below, you can follow me and see everything I post, and you can boost what I post if you want to be nice, and you can sign up for TradingView. That's all awesome. Whatever. But let's go ahead and read this together for a second, shall we? I say, oh, Robinhood, what happened to you? Once the staple of every retailer's trading boom and bust, now a lousy 4-star brokerage in the App Store. People will call someone a total shill for even thinking about you. You turned off the buy button at the climax of trading history, you bitch, and now you're paying the price. And that's exactly why I think Hood is a good investment. Sentiment around Robinhood is incredibly low. You'll get shat on for even mentioning them on Reddit, particularly amongst the tinfoil hat-wearing members of Superstonk and the like. No offense. I don't mean to disparage. We all have our convictions. I mean that mostly sarcastically. You guys are crazy. But this suppressed stock price due to the overwhelming sentiment is not logical. And what was it when this started? It was $7.99. where are we at? What about the tens of millions of teenagers that will turn 18 over the next 1 to 7 years? Will they remember Jimmy? Will you tell them the fireside tale of how Grandpap almost became a millionaire until every brokerage colluded with hedge funds and market makers to screw the little guy? The answer is no. They will not remember, and they will not care. And just as Robinhood was popular before, so shall it be popular again. If Robinhood was popular before, when these kids get old enough to trade and invest again, especially if we get, out of a bear market into somewhat of a bullish market in 2024 or 2025, they are not going to give one rat's ass about what you think brokerage they should be using. They will not care at all, and they will use Robinhood because it's the prettiest, it's the easiest, it's got the information for beginners right there on the front page, and you can't beat that goddamn chart. So they're going to choose Robinhood, and that's just a fact. So it's a matter of, will Robinhood survive long enough for that to happen? And I make the case here that that's probably true. So anyway, did all the brokerages collude with hedge funds and market makers to screw the little guy? They fear that, oh my God, what's the character from The Big Short? With the nasally voice, Michael Scott. That's my brain acting up. If you're that undone with the realities of the markets, then that's what you might think. But that's pretty far fetched. And I thought that when that first happened, even when I lost money. Okay. The answer is no, they will not remember. They will not care. And just as Robinhood is popular before, so shall it be popular yet again, right there. It is only unpopular because it happened to be the most used brokerage by young traders during the GME era. I took a poll on my YouTube community tab to see how many hated Robinhood. We already discussed that. Pay attention here. That's 20% of 25% that switched from Robinhood to Webull. That's 4/5 of those who hate Robinhood switched to Webull. But wait, Webull also turned off the buy button. That's right, folks. They were no better, as you can read here. If I click on that link, it brings us to a Yahoo Finance article where it says Webull CEO explains why trading was restricted amongst the GameStop market mania. And I remember him talking about that, actually. He was the one who gave the clearest explanation as far as what was going on behind closed doors. Vlad Tenev, the CEO of Robinhood, I don't think quite understood. I'm sure he sat down in front of a room of people that were like trying to explain it to him. They had whiteboards and paper and pens and like were trying to draw diagrams and stuff. And like, no, let's do it easy. Let's write it out in words. They could not get Vlad Tenev to understand it because I remember Vlad Tenev he just totally bombed. The CEO of Webull did a better job, but either way, it's bad look. So Webull is only ever criticized for being a China-based company, but never for killing the switch on the meme stock buyers. Same with Interactive Brokers, all because of a 2-day settling requirement at the DTCC and the lack of funds to post collateral for those shares. If that sentence didn't make sense, don't worry, just trust me, bro. So the negative sentiment is overblown. They weren't the only brokerage to turn off the buy button. It was only because they were a smaller brokerage with less capital, and the younger generation won't remember. Great. But it doesn't matter if the younger generation doesn't remember Hood if Hood goes insolvent by the time they get sucked into their yummy UI. So will they? And I say I don't know, genuinely, because I don't know, because the future is not totally predictable, but I give my best guess. As of, shitters. No, okay, we're on the right page. As of Q3 2022, they have about $6 billion in straight cash. Their market capitalization is $7 billion. That means the vast majority of their market cap is literally straight cash. For those in the back, the present value of any asset is the discounted future cash flows it creates. So Wall Street is pricing basically no future for Robinhood. Is this possible? Entirely. They're a money-losing company with a pretty fucking terrible marketing team. However, over the last 4 quarters, Hood's net income has gone from a chilling at negative $1.32 billion to much more palatable, minus $1.75 million. And we can actually look at that. Let's go to TradingView really quick. And we'll pull up Hood. And we'll do financials. Here we go, an income statement, net income. We're looking at quarterly, right? It was minus 1.32 billion, and they've been cutting costs like crazy because they overspent, just like everybody did, like a bunch of freaking idiots, while we were in a quantitative easing environment, and they're reeling back on the spending and doing layoffs. And you can see the earnings projections are on the upward trend, probably likely to hit positive earnings, which is kind of a surprise for Robinhood. So for those of you paying attention, Robinhood is always also on the uptrend, not always also on the uptrend. Let's see if there's anything else I should mention. Obviously, it doesn't pay dividends, which is good. Whatever. Is this cash flow? No, it's income statement. I'll look at cash flow. So going from grossly cash flow negative, it looks like, to nearing cash flow positive. Anyway. Okay, so for those in the back, the present value of any asset is the discounted future cash flows it creates. That's what generates value from any stock, whether it be because of the dividends in the future or because a company might buy it out in the future. It's whatever future cash flows that company will create for the shareholder. So Wall Street is basically pricing in no future for Robinhood. It's entirely possible. Blah, blah, blah. I already said all this. If they stayed at that level with all else held equal, they would last about 8 years. That's enough time for the younger generation to get sucked in, and it's enough time for management to turn the ship around. Of course, there are headwinds. Trading is more fun when stocks only go up, but the risk reward is too good to not at least take a bite. Sure, you might lose whatever you put into Hood, but with every value style investment, the probability of failing is usually higher. But if you win big. That's the thing with value investing, is that it's usually a shitty looking stock chart, and people aren't talking about it. Now, there's not a lot of people talking about Hood. I haven't seen people talking about Hood. It's that's what makes it a unique opportunity, is when you can buy these stocks at cheap prices that will eventually not be at cheap prices, because of sentiment and because people are just salty. People aren't buying Hood because they just hate the company. That won't always be the case, because again, the present value of any asset, stocks, is the future discounted future cash flows it creates. Not to mention, we have yet to see the results of their inclusion of IRAs and their 1% match, which is great, actually. If you look at their 1% match, if we do investment calculator, they raise, we'll start at 0. They raise the 30 years. They raise the how much you can contribute yearly. So like on average, we'll probably say 7,500, although it's probably much, much higher over 30 years. But we'll say, you hit a nice solid 15% annually, and we'll hit calculate. And what do we get? 30 years. Did I enter for something wrong? 75. Yeah, I did. The ending balance would be $417,000 if you contributed $75 at the end of every month. So you see the value of a 1% match. It doesn't seem like a lot, but it is, especially given whatever return you have. If I kind of half this into 8%, which is a more realistic goal, really, it'll have dramatic effects on the ending balance. So it cut it in a quarter, but it's still $105,000. So this 1% match thing is not something to overlook, and I don't think smart people will be overlooking that. Okay. So we have yet to see what happens with the inclusion of IRAs in the 1% match, which may help draw in some desperately needed customers with larger deposits. This is a risk a little, potentially win a lot situation. That's what I see. There is no near-term bet. It's a long-term play that I imagine will take years to unfold as management kind of turns the ship around, kind of gets the younger generation into it and helps them kind of rebrand themselves. But you have to buy shitty looking stocks that you have conviction in sometimes. Otherwise, you'll never be the equivalent of the guy who bought Apple at $2. Lastly, this could be an acquisition play. It's no far-fetched thinking to suggest that some larger brokerages would love to absorb the post-GME leftovers. A basic controversial take from your boy in the money. Okay. So I just want to say, I want to point out there's a bias because most people were using Robinhood when they turn off the buy button. And two, Hood's actually not that bad of an investment idea, in my personal opinion. I'm not telling you what to do at all. At all. When people ask me, like, do I buy more? It's like, dude, what's your age? When are you going to retire? What other businesses you got going? What other investments do you have? How much money do you make? How many dependents do you have? Do you have a partner? How much does your partner make? Like, it's a dumb question to ask. Should I buy or should I sell? And how much? Like that's not even a question either. And are we talking options or are we talking straight stock? So when I talk about Robinhood like this, I'm talking about it from my own perspective, and I know how much I'd be willing to put into it. I'm not telling anybody what to do because everybody's situation is unique. And as I've said before, Donuts, it's about using your brain. That's what it's there for, to see if it makes sense to you and to see how much you should put into it, etc. It all depends on a lot of life factors. So I am in no way telling you to buy Hood. I just wanted to give you my base take on it. And was there one more thing I was going to show you? Man, I feel like there was one more thing. So really, it's just the fact that everyone's biased, which is a big red flag for me. No one's paying attention to the younger generation that's growing up and going to eat Hood up like crazy. They're going to love Robinhood, especially as they add more stuff to their product line. Like having IRAs is great. It is a little bit funny how like having basic stuff is amazing for Robinhood. Like having IRAs is like something to pull like the confetti thing for. When pretty much every other brokerage has it, but it's because it's such a like pretty platform that makes it exciting. Anyway, most people are probably going to call me a shill. I'm not a shill. I'm a truth seeker, and that's just how it's going to be. Oh, I was just going to show you what the returns were so far. So let me go up a little bit. So the fun thing about TradingView is if you follow me, you can see my ideas. And I wrote this idea right there, right where that stock price is. And if you hit play, obviously so far it's panned out pretty well. And it makes sense because they're trading basically at what their cash holdings were, which is ridiculous. Now they're trading at a much more reasonable level. And if I can't zoom in and do it very easily, but if I roughly gauge where it is, that's about 41%, so not bad. And there's other stuff on here that you should take a look at too, like this one, rally into 2023. It's a short thesis, but it plays off of much longer theses that I've discussed on TradingView. And what do you know? We have a rally in 2023. This is where I wrote it. The rest is what happened. Here's another one where I could do it from a technical standpoint. I call this the cock and ball torture pattern. If I hit play, it is actually outdoing my arrow. And so I encourage you guys to give these a read. And it made sense to me that a bearish market will not be up, down forever. And if we're entering a point where rates are decreasing and we're seeing through, I've said it in a video, once people see through the Fed's kind of fake hawkish stance, that they're actually excited about the deflation that's happening and they did this last time, we'll see it moon, and the stock market has mooned over the last few days. So it's never going to be up, down forever. Let's drag back to I can't. Let me pull up a QQQ chart and show you like other kind of bear markets, right? Okay, let's go back to it's 2018. Here's 2008. Does this look like up, down, like a zigzag pattern to you? No, it's up, down, down, up, down, right? Zigzag down, bottom. And then it's just up from there. So that's not always going to be predictable. So let's go to 2001. Where are we at? Here we are. Here's the recession. Down. bounce, right? Bouncing up, bouncing up, bouncing up. Huge leg down without any really zigzags, right? And then it goes up and stagnates for a little bit, and then down again, and then up. And you're like, oh, it's over. And then it's like, psych, no, we're still going down again. It's never going to be just this perfect, let me draw it, that people will think. Let me go to present day. This is what people thought. They thought, look at this. We have a trend line here. Amazing, amazing stuff. Here's how it's going to work from here on out. It's going to go down. Then it's going to go up, hit that trend line, go down, and then up, and then down, and then up, and then down. That's what they thought was going to happen. Dude, this is not how things happen. Sometimes it trades sideways for a little bit. Sometimes it goes up like it is right now. And eventually when bad economic data comes in, right now we're playing backwards. I'll make a video separate on this. Right now it's backwards, where bad economic data is good because it means we'll stop the rate hikes because we want this rate hikes to stop, please God. And so when bad economic data comes in, the stock market is going to go up. Eventually that'll flip once inflation comes back down close to 2%. We're going to hate bad economic data, and we might see it take some more, and there'll be another buying opportunity. That's my guess. That's my guess. So yeah, hate me, love me, anything in the middle, I don't care. That's just my opinion on Robinhood and its stock. And yeah, I'm right in the short term, but really, like I said in the thesis itself, it's a longer term thesis, and the real returns come over the long term. 40% is great, but when you have such a cheap stock price on something that could become very high quality, believe it or not, it creates potential for like 10 baggers and stuff, right? That's what value investing does. You have a lot of losers. So Robinhood could be a loser easily. It could be a loser. It could get bought out, which wouldn't be a loss, but it wouldn't be like you'd miss out on the growth of Robinhood. Robinhood could be a loser. But that's the thing about value investing, is when you're finding those cheap, undervalued stocks that are like barely hanging on, and you try to find trends that give positive benefit of the doubt, or whatever you want to phrase it as, and you buy, and quite a few will sink on you and go bankrupt, but the ones that win, they get like 10 baggers, or, you make 20 times your money, whatever, because they're buying at such a cheap price. Then all of a sudden they're growing like crazy, and everyone else finally clues in and hops in. E.g. like Apple, and whenever it IPO'd. Okay, I think that's it. Yeah, look at my link tree down below. You can see everything I type out and talk about, and you can always hit play and see how my predictions have planned out. And I also do educational stuff on here too, so it's a good place to just kind of follow along with me. And that's it. So I love you guys very much. Each and every one of you in a special, unique way. My heater's turning on, so it's kind of loud. I wish you guys the best weekend. Have the best week. Have the best life. Peace and love.